Hi, and welcome to review and hints for round four, moving into round five. So this is going to be the review for round five, and then I'll give you some hints to help you do better in round five. So you can see here the current points. Most this round was a building round, so many teams were able to maintain their points, but not get specifically large amount of points in this round. Profit margins, one team was able to score above 64% in gross profit margin, and I'm still worried about the two teams that can't break the 40% profit margin. And the 40% profit margin was established in year zero, and investors are expecting profit margins, by round five, everybody's profit margins should be above 50%, if not 60%, if possible. Stock prices are getting higher, but I also want to look at total points. So we're looking to do a total of 2,500 points in 6 rounds. We've completed 4 rounds, and there are a number of teams over 2,000, meaning they only have to get 250 points for the next 2 rounds to make it, or less. And there are plenty of teams who are close to or above 1,700. So all those companies are doing great shape. Anybody who's below 1,500 points really has to work hard these last couple of rounds. Watch my YouTube videos I'm producing every week to show you how to do the simulation, read the student manual, play practice rounds, really put some effort into improving your scores. So let's look at the charts for the week. Okay, so we see here lower. We see here we're looking at net profits per team, and we see here that we have a nice uptick again. Net profits now for many companies are going over 120 million in net profits. We have a number of companies increased to that level. Just about all companies have done better than 180 million. Let's see. So that's very good. All right. So let's just move down. Points per team. We see that there's a huge difference between points and rounds, and it really depends because you're competing against two things. One, you're competing against yourself, which means you're trying to do better than you did last year, which is in reality when companies issue their annual and quarterly reports. They're always trying to surpass last year's performance, but you're also competing with the other students in the class for sales. So you're competing on two fronts. You're competing against last year's performance, and you're competing against other students in class. And some teams have really shot up their stock price high, such as ASPAR Motors, Automark, Strategic Investment, Keyless Cars, Mega Motors, Excelsior Auto, Best One, Notion Auto, JS Automotive, and LEAA Auto. These are all companies doing very well in stock price, and their stock price is doing well because their profit margins are high, and they're giving investors, they're making decisions that are maximizing investors' wealth. If we look at sales per team, there should be, in a market where each car vehicle is growing at double digits and all cars are growing about 20% a month, no company should have reduced or flat sales, which we have 3 companies here which have kind of flat sales. And we see here this company was able to really take off in their sales from round to round, so that's a great improvement. So we have a new leader this round, JS Auto is a new leader in sales. So there's no reason for sales to go down. The market is growing quickly, very quickly. So if you make a competitive vehicle, your sales should go up. So if your sales are going down, your forecasting is the reason, and you really should look at the student user guide for the forecast and the sample forecast schedule. Earnings per share, Strategic Investment really turned it around and really cranked up their earnings per share, and this is why they are achieving such good points and positions this week, because they really focused on their earnings per share and they turned their company around very solidly. Okay. Now, if you're flat, some companies down here are pretty much flat on your earnings per share. Again, in the growing market of such fast growing sales, your earnings per share should be increasing from round to round. Okay, so let's go back to my practice game where I go to give you hints and ideas of how to produce the round. So again, now, so I'm going to do things a little bit differently this time. This time I've completed round 4 just like you have. And this is how I would move forward. So I'm not going to take the time again, which I did the first 3 rounds, to put actual inputs in every cell. Now I'm just going to kind of say, how would you review? You've completed 4 rounds, and you're going to start to work on round 5. How should you proceed? Well, the first thing you should do is look at the overview. So purposely here, I try to do a little bit worse than before, to pick up some ideas of what mistakes you could be making and how to improve upon it. So one thing I would say here, a big problem is my gross profit margin. I did increase my gross profit margin, but my operating profit margin decreased and my net profit margin decreased. So why is that? Well, the most simple explanation is that on the operating side, I overspent on advertising, and on the net profit margin side, that overspending in advertising fell through to the net profits as well, so I lost points there. And then I picked up a large amount of assets, which was most likely, if you go to production, you'll see that I have all this current inventory. So a lot of current inventory was unsold, almost 1,000 vehicles here. And this one actually, okay, so I have 1,000 vehicles from truck, and I have 400 vehicles from sedan, and I have 600 vehicles. So it's 2,000 vehicles I thought I would sell, but I didn't sell. So all those vehicles went into my inventory, and then my inventory became bloated, so my return on assets suffered because my assets went up, but they didn't produce a return because those unsold cars are not producing a return. And that hurts my return on investment, because my investments in making these cards didn't return a profit, and my return on equity. So, and also my return on assets suffered as well, because if you take on unproductive assets, such as inventory, which are cars that were left unsold, or extra production plants you don't need and you're not utilizing, then you wind up with poor results in the analysis of assets and return and return on equity and investment, because you're spending money that's producing nothing. So if you buy a factory that you're not using the car, you buy a factory that gives you ability to build 1,000 cars, and you don't build 1,000 cars with that factory, then that's a wasted asset. And if you do build cars and you can't sell them, those go into inventory, it bloats your inventory, and then those are a wasted asset as well, because it increases your fixed costs, and those unsold vehicles will not produce any profits. Also, if you forecast too aggressively and you don't sell your vehicles, you're going to come in on a lower percentile on your forecasts, and that's going to lose points in your forecasting area. So overall, that's kind of a bad round. So then I would go into the assessment area, and I would say, okay, for my assessment area, I'd look at total asset turnover, and it says here, don't buy extra operational plants you can't utilize. Make sure your capacity utilization is at 80%. That means if you buy a factory, make at least 800 cars with it. Also, total asset turnover is make sure your forecasts are accurate. Don't be so disconnected or aggressive in your forecast that you have all this unsold inventory, because that will result in a lot of assets that are not going to turn over into sales. Return on assets is sort of the same thing. You want to have you want your assets to generate as much profits as possible. So by looking at the assessment area, I can get some ideas on how to improve things. And of course, looking at my charts, specifically my industry charts, my performance charts. So I'm going to go down here, and I'm going to see at the very bottom that I sold. I met all of my market potential except for luxury. So luxury was the one area I didn't have extra inventory, and my forecast was only 4,000. I could have sold 4,281. So that was a missed opportunity. But my other truck, luxury, truck, sedan, and economy, you see the blue, when the blue bar is the yellow, it's the top of the blue bar. That means I met all the demands, but any cars I made above that demand remained unsold. And that is bad for my asset, total asset turnover, return on assets, and things like that. So then I would go into the industry and say, okay, I have, how did I do compared to what other car manufacturers, what were their forecasts, what their market potential? So my market potential compared to my competitors, what did they do better? And one thing they probably did better was forecast the amount of cars they make and more closer to their actual car sales. So now when I go into the next round, I see that when I'm going to do my forecast, I'm going to pay closer attention to forecasting a little bit more accurately. But luckily, since I'm moving into the next round, I'm going to have I can rehabilitate or refurbish this current inventory and resell it. So I don't lose out on these extra cars. I can resell them next year, just update them to the current model, and they can be salvaged at no extra cost. So what I don't want to do is, say I want to sell, I would look to the student manual to give me a better idea of my forecasts for each of the vehicles. And the student manual, of course, can be found at the bottom of any of the pages is student manual. So I'd open that up, and I would look to the forecasting page to get a better idea of, okay, moving into round 5, this is what I expect to sell as an average company. Now I could try to push my forecast a little bit higher if I think I'm going to do better than the average company, but this is a good point to start at. Okay. So, and I'm also going to continue to invest in my operational investments, and I'm going to continue to try to advertise. I do an analysis of my advertising compared to my competitors to see on charts. I might look at the marketing charts and get an idea, am I overspending compared to my competition? So here's me, and yes, in this area I'm overspending on marketing, and again, in each of the areas I overspent on marketing compared to my competitors. Even though I overspent on marketing and it lowered my operating investments, my cars still suffered. I still forecasted more aggressively. I thought that if I had advertised more heavily, then I would sell more cars, but there was a level of diminishing returns where just by pumping a lot more money into advertising didn't necessarily result in selling a great deal more cars than I thought. So these are mistakes you make. You analyze what you've done, and then you make a corrective course for the next round. Okay. So I'm not going to be putting inputs into round 5 because that's the round you're currently working on. And what will happen is you'll just copy my inputs, and everybody's inputs should be different based on where their company is and what their company is trying to do. So now that most teams have got a pretty good hang at the simulation, and most of the companies in the simulation are performing at 70 percentile or higher, meaning that they're performing better than 70% of the players of the simulation over the last 2 years, which I think is over 5,000 players. So a lot of the students are doing very well in the simulation. So just keep up the good work, and it's never too late to earn back some of those lost points. Okay, so I'll leave you with that. Good luck with round 5, which is due next Saturday, and I'll be talking to you soon.